In this tutorial of MetaSwing for Bloomberg, we're going to cover volatility-based support and resistance. These are the projected SR lines. And here we have the U.S. Treasury Note 5-year. We're zoomed into a 60-minute chart, and we're going to talk a little bit about the SR lines. These are support and resistance lines that are projected based off of volatility. For the ease of convention, they're labeled SR, which stands for support and resistance, and they're numerical 1 through 8. And as you'll notice, these come in pairs, and these are based off of significant adaptive peaks and troughs based off of volatility, specifically from the N-band calculations. So for example here, for the SR 1 and 2 range, it's off of a high peak and N-band, and this becomes projected support and resistance. Conversely, the SR 3-4 is based off of a trough. Significant trough is deemed by mathematics behind calculations. And so again, you have a range here, SR 3-4. Stepping on down to SR 5 and 6, this is based off of a peak in the lower N band. And SR 7-8 range is based off of a trough in the lower N band. There's some rules to keep in mind when you look at and use these SR lines. And again, I can refer you to the performance stats page to get a better idea. But in general, just like in traditional technical analysis, once resistance is pierced, it then becomes support and vice versa. So here we have an example of that where price is moving through the SR 3-4 region. It tests it, breaks above, and now this is support. Breaks below, it was support, now it's resistance, vice versa. Another thing to keep in mind is that if price has not been recently traded, or one of the SR levels has not been traded, then it's become more significant. And so here's an example where price rallies sharply up to the SR2 line, stopping exactly there. This also augments the third point, which is the momentum with which price approaches an SR level makes it more significant. So the more rapidly price is moving towards an SR level, the quicker it is to be rejected. Also, the more often a support resistance level is touched, the more likely it is to be violated. This can be similar to what you see in traditional technical analysis, but it sort of depends on what kind of charting you're looking at, whether it's point and figure or line charting, etc. So here we have an example of going back again to the SR 3-4 range. This was put in here on August 30th, early in trading day, and it's tested again, third time, fourth time, fifth, sixth, seventh time, and then it breaks. So the more often something is tested, the more likely it is statistically to break. It works conversely as well to the upside. Here we have this same 3-4 level that was set in on August 25th, tested several times, and then broken. And then finally, the further price has traveled without a reversal to get to a support resistance level, the more significant that is as well. And there's not an example here, but we'll look at some of those in some live examples. Okay, we're going to take this live example here to demonstrate some basic tenets in support and resistance with MetaSwing Suite. There's 5 of them roughly. The first one is once penetrated, support becomes resistance and vice versa. So looking at our first example here, in October of 2009, the price of the oil ETF had a shift in the support resistance level. So this area, as price was advancing, was resistance. Resistance is broken over, and now this becomes support. This leads us to the second tenet. The more often that something is tested, the level, the more likely it is to be broken. So that can work in either the upside or downside. In this example here, after support is put in this level between the SR 3-4 lines, you can see it's been tested upwards of 12 to 15 times. After that, it begins to break down, and you finally have on the 27th break, and this support has now become resistance. Another important tenet is the speed at which price, or some might call momentum, the more intensely it approaches price, the more significant that support and resistance area will become. So here we had off the late January lows, we have a technical bounce off this price area, but then it collapses pretty sharply. And so you can see that this SR 5-6 region held pretty well, and this is a demonstration of the quicker that something approaches a support resistance region, the more significant that region is going to become. And this example also articulates that another phenomenon is the further back you have to go for a price level to have been touched, it also becomes more significant. So if we look back here on this touch of this region was in early February. If we scroll back in the chart, we have to look back to late September. So there's quite a bit of a time range, 3 months, where this level hasn't been touched. And this is kind of interesting also in that if you look at traditional technical analysis, you do things like you draw a trend line. So we can do that quickly here on the Bloomberg platform. And so you can see that this concept works generally in that you have your 2 points to even do a basic trend line. It holds, but then you have a breakdown, right? And how many times have we kind of been suckered out of a trade where our drawn support resistance level has failed? This kind of articulates where having this extra intelligence is a benefit to you. Okay, another interesting concept is that the further price is traveled without having stopped, the more significant support resistance level will be. You can kind of see this in this precipitous fall from late April into mid-May. Now it actually pierced the level, the 7-8 level, due to the momentum, but then price pushed off that level. You have it again where price had fallen from late July into mid-August, so a 2-week plunge, and this level held here. This is the same as the previous example with the OIL equity ETF, looking at the bounce that actually went beyond the support resistance level. So it was an extreme event, highly news driven. However, you see that on this level that buyers actually came in and supported this level here. And so we'll get into these are the VVSR lines, and we'll get into these in the next tutorial. In conclusion, here's a summary of the support and resistance rules that we have just discussed. This slide quickly shows that using statistically valid backtesting and using best practices and over an 8-year market neutral time period that covers both 2 bull markets and 2 bear markets, and using the S&P 500 components and additionally removing survivorship bias from that data, that these support resistance levels demonstrate not only strong outperformance, but they're statistically valid support and resistance. And so they can be consistently applied, and they lead to known performance characteristics. And that leads to actionable strategies. Additionally, these are non-traditional technical analysis that provides additional market intelligence that you wouldn't otherwise have. Thank you for your interest in MetaSwing and for taking time to watch this instructional video on volatility-based support and resistance, that is the projected support resistance lines. Here's our contact information. Please don't hesitate to reach out if you have any questions. Good luck and good trading.